Multifamily rent growth in the US is still positive, but it's getting very close to flat. Rents rose just 1.2% year over year in February, continuing a steady slowdown from late last year. And on a monthly basis, rents are barely moving, growing just 0.2% annualized. That tells you the market hasn't turned negative, but it's operating in a very low growth environment. Even the breadth of growth is narrowing. Only about 65% of markets saw rents increase month over month. That's well below the near universal growth that we saw earlier in the cycle, but it's also well below the 70 to 80% range that we were seeing pre-pandemic. And geographically, performance is very uneven. Markets like San Francisco and Chicago are still seeing strong rent growth, while parts of Florida and Texas are posting outright declines. What this largely comes down to is supply. High levels of construction, especially in Sunbelt markets that boomed in 2021, 2022, are still weighing on rents. But there are early signs of a stabilization as supply pipelines are starting to rebalance. With absorption beginning to firm, the scope of markets with contractions should narrow throughout 2026. At the same time, with net immigration totals falling off, the housing demand that powers the rent growth engine will also be operating on a lower octane, likely limiting the upside speed ahead.